Hi, my name is Alex Buriak, and I'm the Senior VP over here at Jet Lending. This educational video is going to go over what to ask your lenders when you're shopping for lending. Okay, so it can get very confusing very quickly, especially if you have not worked in the finance area for your investment properties in a long time. So, what I wanted to do is make sure you had a few questions to ask your lenders to see how you can calculate your profit margins to make sure you're getting the lending that you need to grow your wealth. One of the questions you should ask is, do you evaluate the property prior to lending? And what I mean by that is, does your lender kind of comp the area to make sure that your numbers fit into what you're projecting ARV wise? And with any pictures, do your repairs project what's reasonable in the investment market to repair the property? And the reason why you should ask this is residential appraisals can go anywhere from $500 to $1,000. Uh, Commercial appraisals can go to $3,000 to $4,000. You should have a good idea that you and your lender both have the same type of idea of values prior to ordering that appraisal, so you can calculate your profit margins, see if that money is worth the risk. So see if your lender is evaluating properties for you to make sure that your numbers are in line for what's projected in the market. Another question you should ask is, do you have any upfront fees? Application fees and other types of money prior to closing may be a sign that your deal's not going anywhere. So know that there's third-party fees like appraisers, inspectors, surveyors, anything like that that you have to pay prior to closing, done in a third party is normal work of business. But your lender should not be charging you any fees prior to closing. Three, watch for teasers and gimmicks and term changes. Make sure you ask questions about everything about your loan and its terms. Terms are very important. Most lenders lend their own capital and they have a cost of funds for that capital. They add a small margin on top of that, and that's the lender's spread for deploying the capital. Jet Lending, we lend up to 70% of the ARV. We are LTV lenders and not LTC lenders. We charge interest on the whole 70% of the ARV because we actually pull the money from our accounts to fund at closing and then to hold an escrow for all your repair draws. The reason why we do that is we have to make sure that we have your money waiting for your specific property anytime you need the repair draws to give you that money back quickly so you can keep your project moving. So anytime you use a hard money lender or an asset-based lender or let's say a private money lender, make sure your repair draws are being held in escrow so you know that your money is waiting for you to be reimbursed and your lender doesn't have to go find it later and then have issues reimbursing your draws. Since Jet Lending, we lend our own capital out, have we made exceptions on holding interest for the escrow draws? Yes, but that's on a case-by-case basis. Um, Watch for very low points and origination fees. The reason why I say it is most capital comes from lines of credit from either banks or private lenders that lend to the lender that lend out the capital. This also comes into the case of the cost of funds for your lender. If you're seeing very, very low points and very, very low rates, make sure you look at your terms. Are these points added to the middle of your term for extensions? Are there interest rate increases in the middle of your term? Are there origination minimums that exceed the stated points in your term sheet? So when you're shopping around, make sure you ask questions on if your lender has a max LTV and a closing LTC. Do they have extension points? Are there rate increases? Are there points on the back end? And if there's any fees, where are they going? So you can calculate your profit margins to make sure this type of lending on this type of property is what you're expecting when you actually close and sell the property or refinance. Four, remember your lender is just another part of your team. You should have asset-based lenders, you should have private lenders, you should have title companies and contractors and surveyors and inspectors and real estate agents and insurance agents. They're all part of your team. Interview them like you would interview any employee to your business. See if this is someone you wanted to hire for your business and make sure they're there to help you make money and grow your wealth and freedom. Well, this is a good start, and we hope to hear from you with more questions. This is not to be meant to be all encompassing, and I always recommend you write your questions down before you call, and you read them off, and then you write down the answer next to it to make sure you knew you went over it. I hope this helps find the right team for what you're planning in your investment career. And if you need anything, don't hesitate to reach out and call, email, text, chat, or use this QR code to get what you need. I hope you have a great day. We'll talk to you later.